how to manage a massive loss on target put option, naked put option that we sell. I'm gonna show you the steps exactly how to manage if you took the trades. I talked about target selling 130 put about a week or something ago in one of my videos. Collect 100 and something bucks. This is the usual process. Do 1 or 2 a day, 50 trades a month, something like that. The 100k account, margin account is double that, and that's it. And some of them, because we're selling naked options, some of them, like this one, will have a massive loss, but it's not the end of the world. I'm gonna show you why. Again, my name is Ziv. I like to sell naked options on Tasty Trade on margin, where the margin requirements are not Robinhood. This is not cash secured puts where you need to put the whole amount up front. You need like $4,000 or $5,000 for this trade. And let's see what we do. So if you know me, you know that I like to sell naked puts 8 times the ATR on forever stocks, my forever stock list. Let me show you. I got about 50 of those in my forever stock list. You see forever put month 1, forever put month 2, forever put month 3. If you go to forever put month 1, let's go by change. See Roblox, UPS, JP Morgan, Home Depot, Microsoft, Starbucks, Apple, Caterpillar, Chipotle, Let's go to month 2. Okay, we got Nike, CBOE, Visa, Burger King, Waste Management, Carvana, TJ Maxx, Orville, Live Nation, DoorDash, etc., etc. Let me change by this to see. I'm just looking for target. And let's go to the third one, forever put. Let's see if I have a target in here. I didn't even put it here. I should add target. Okay, good to know. Dollar Tree, Google, Tesla, Amazon, AMD, Coca-Cola. So about 50 stocks. I need to add the target to this list. It's probably on a different list that I would like to sell naked puts all the time. Recycle. I do like 1 or 2 a day from this list of 50 until I'm done. And then again and again, repeat. Sometimes, like today, Target posted earnings and they dropped. Okay, because I do 8 ATR, they have dropped. Look at this, to about 10 ATR or something, like super crazy. We sold the 130 naked puts, collect about 100, 110, 120, I don't know, something like that. That's the average that I do per contract. What does it mean? What does it mean? Now the target is down 21%. First of all, if you just bought Target last week at 155, 100 shares, you're down 20%. That's a problem. That's why I like when I do sell naked puts. Step 1, it needs to fit all my criteria. 8 times ATR, IVR over 50, TTM squeeze right here is in the green. And this line, the Kettler channel, is in the blue. If it all check marks, give or take, and I collect over 100 bucks per contract, and the margin is around 5-6k, nothing big, nothing major, yeah, I execute the trade. And if the stock does drop 8 times the ATR by expiration, mind you, by expiration, then yeah, I will probably get assigned, and then and only then at that point I will need to put collateral of the full amount. So let me show you what you can do. First of all, I'm looking at the chart right now and I see, look at the ATR. It's crazy. It's crazy. It went from $3 a day to like 6, double, just because we did a 20% drop. Now you might think selling naked puts so risky you can get wiped out. That's not the case. That's the case for selling spreads and condors. I don't like those. I do those maybe 5% of my trades. As if I sell a spread with like 90% chance of winning, I collect $100, risking 900. Eventually that 900 will wipe 9 winning trades. So that's why I don't like to sell credit spreads or condor. I really don't. I sometimes use Iron Condor on big ticket item like Eli and Lilly, Netflix, Costco, stuff like that. But 80+% of my trades, simple, selling naked puts on stocks that I would like to own, 8 times the ATR. So we got the ATR blew out of the water. It's now a lot. It's a lot more than 8 ATR after this earnings. And I'm gonna show you exactly what you can do. The IVR went down. You see here it was peaking at 90, and now because of earnings it's 17, going down, etc., etc. But this is the key. This is the key. Kettler channel right here. We were all the way in the blue. This is again. Change the settings to 8 times the ATR. I changed the settings, not the 8 times the Kettler channel. So it's also super duper extreme. And look at this drop right here. We drop. You see this red line? We drop from 150, which is where the blue line, where it should trade 8 times the Kettler channel. This is where it should trade the whole year. And now it dropped in one day, pop, to the green line. The green line, to me, 8 times the Kettler channel is the ideal time to go long on a forever stock, and that's it. And sell covered calls against that once you get a sign, and that's it. Simple. Let me show you again just other stuff. You see target in here. So it's 160. This was, it says May 10, probably earnings, and then it dropped May 21 to around, where are we here? 140. It drops to 140, it touches the green. Again, 8 times the Kettler channel, not the default of 2. 8 and 50 instead of 2 and 20, something like that. And then, again, 8 times the Kettler channel. Go long on a forever stock. It went up from like 140, 139, and settled on the blue line, which is where 150, which is where it needs to trade like 90% of the year. Did nothing, went down a little bit, back to the blue line, did nothing, major drop to the green right here. And again, it's 8 time Kettler channel. I'll be happy to own 100 shares if I have 130 option. So that means that I will be long 130, like 100 shares at the price of target of 130 bucks. That's one option. Not today. I don't do anything today, because let me show you what it was for December 20. If you click the 130 put, you see here, this is the trade. Right now it's at 900 bucks. Okay, 900 bucks. We collected, let's say 120, I don't know, something like that, about 2-3 weeks ago. I need to check. But again, if you do 1 or 2 a day, 20 to 40, 20 to 50 trades a month, one of them will drop 8 to 10 ATR. And at this point you gotta say, you know what, why did I pick this stock in the first place? Did it finish all my check mark? Yes. So as you can see, it's not the end of the world. You have basically 3 things. Option number 1, do nothing. Do nothing and wait for December 30. You still have 30 days. If and only if at December 20 target closes below 130, you get a sign, and at that point, you see here, buying power is still amazing. 4,000 bucks, 3,900. At that point, that $4,000, you will need to put like 2 hours before the close on December 20. You will probably get an email from Tasty, and they will say, hey, you need to put up a collateral of like 13,000 bucks, something like that, auto email. Or if you don't, they will close your position on that Friday, like 2 hours before, for that price, and you will take a hit for whatever the price it will be, and you will take a hit. Now, so that's one option. And then at that point, you are long 100 shares of Target at the price of 130, and then you can just sell, if you wish, covered calls, 8 ATR or in the money. It's up to you. I'm not gonna sugarcoat it. You are at a loss, no matter how you spin it. You took the risk to buy Target at 130. That's why you got paid $100, which was a good deal at the time. We didn't know the Target will drop like 10 ATR 2 weeks later post earnings, but again, you saw the green on the Kettler channel, the 8 Kettler channel. So who knows? So that's one option. Do nothing and if it closes below 130 at expiration, you need at that point to add from your 4,000 buying powers, you need to put 13,000 on the line, and it will just get converted to 100 shares of Target for a price of 130. It's one option. Option number two, if Target by that point, by December 20, 30 days from now, will close 131, 135, 130.01, whatever the case. If it closes above 130, and if you do the math, let's do the math a little. 122 divided by 130, yeah, it's about 7%, 93.8, 100 minus 93.8. You need Target to go up 6% for this option to expire worthless. If you don't want to own the stock, if you just want to wait and see. Okay, so another option, do nothing, you still have a month. Can Target correct 6% in a month? I don't know. That's one option to find out. There's another option, which is right now. Okay, there's actually two more options. The third option out of the four is to close the trade. Close the trade. You can buy to close right now the put that you sold. You got income of like $100. Oh, hold on. Got disconnected for some reason. You got income of $100 and now it's worth $900. Close the trade. Take the loss of $800. Move on to the next one. It's part of the game. If you make 20, 30, 40 trades a month, each one collects, I don't know, between $100 and $200 each. One of them will take a hit. Let's say you get 2 hits in a month of like 8 times ATR, and you don't want to own the stock. Yeah, you make 5,000, you take a hit of like two stocks at 1,500, you still make 3,500 a month on a 100K account, 3.5%. That's reasonable. 3.5% a month in 12 months, 40% annually, just by selling naked options. That's one option. Close the trade, take the hit, $800, and then you don't need to put $13,000 on the line a month from now, and you basically you don't need to own Target. Pretty simple. You sold, you release the buying power, the $4,000, you take a hit, you drink coffee, you go for a walk, you start again the next day. It's not the end of the world. There are losses in this game. This is a numbers game. That's why you don't just do one trade a month. You do one a day. That's about 25 trades a month. Okay? If one or two of them goes bad, the other 20 plus will more than double and triple that, basically, because not all the stocks that you sell naked puts on will lose 8 ATR by expiration. Just unlikely to happen. So that's one option. Close the trade, get the damage of $800 lost, move on. It's part of the game. It's not the end of the world. You did a gold trade yesterday for like $2,300 in 100 days. You did the ES futures. If you saw the video, that's like $3,300 income in 100 days. Every day $50. In like 2 weeks you covered that, if all else is equal. Okay, if nothing happened, the ES and the gold do nothing, in 2 weeks you cover that loss. 2-3 weeks. So that's just part of the game. The goal is to trade small, trade often. Don't do what you want, but I don't do like 10 contracts and then I'm on the hook of $8,000 just because I collected 10 contracts and $1,000 upfront. I don't do it. I do 1 or 2 contracts. That's it. On 50 stocks a month. That's it, and move on. And that is it. Now the fourth option is if you think Target's going to zero, and then if in the next 30 days, worst case scenario, Target says, hey, we're going bankrupt, stock goes to $1, you're on the hook of $13,000. At that point, you can ask yourself, okay, what am I doing? But you can also say, what are the odds that it will happen? So this is the risk. There's no free lunches no matter what we do. All I'm trying to do is put the edge in my favor and show you that it's not the end of the world. You do take a loss sometimes. In this case, it's either $800 loss now or on 100 shares of Target at 130. Remember, it was 160 like 2-3 weeks ago. So to me, it's a good deal, because at that point I can either sell covered calls, let's say 130. Even if I sell the covered calls in the money 130 for January, it will probably be worth $5, $500 in my income. And then I reduce the $800 loss, like that I will assume at the end of, let's say the price, it closes, let me explain. Let's say it closes 122 by December 20. Same thing. You lost $800 because you bought at 130. Target is at 122. At that point, yeah, I lost $800. I automatically sell, not 8 ATR. At that point, I will do the wheel and sell in the money 130 Target. Collect about $500. I assume, give or take, depends on volatility and all that. 30 days later, collect $5, and then that 800 loss is now like, it will be gone. If Target will stay under 130, it will be like 300 loss. So it's not the end of the day. If it will go to like 135 or something like that, yeah, that's fine. Then you still collect the income and you minimize your loss. There's no sugarcoating it. It's not, hey, we lost, the Target took a 20% loss and we're winning. We're not winning, but it's not the end of the world. That's what I'm trying to say. Either take a hit of $800 today, gamble and wait 30 days because you want to own 100 shares of Target and you saw Target on the green line. Okay, let me show you again. You saw Target on the green line on the Kettler channel, 8 times the ATR, which is around 120. And just wait it out and do covered calls in the money, out of money. It's up to you. Do the wheel, but that's how I play it. Sometimes we take the hit. It's not 100%. It's part of the game. Hope this was valuable. All the links below. I'll see you next time.